The crash that everyone's talking about right now will be worse than 2008.
Bitcoin has failed.
I think the crypto market has taken it much worse than we expected.
Being woven into the fabric of the financial system.
Maybe Bitcoin doesn't even have a thesis anymore.
We can get to 40,000. 40,000.
All the pieces are in place for crypto to be bottoming right now.
The crash effects will be nothing like what most people are preparing for.
People are saying Bitcoin has failed, that it lost its purpose, that it doesn't work anymore. And when you hear this from the same people who supported it the most, it can feel confusing because for years, this voice taught millions, explained wallets, explained cycles, told everyone to stay strong. But lately, some of them sound unsure, even worried. And we are living in a moment of uncertainty. You can feel it everywhere, in the news, in markets, in conversations. AI is moving fast. Economies are shifting. Regulations are changing. Prices go up and down quickly. And when everything moves at once, people start asking, is something wrong? Or is this just part of the journey? Because markets don't only move on news, they move on feelings. Recently, the Crypto Fear and Greed Index dropped into extreme fear. That means most people are scared. And history shows something interesting. When fear is very high, markets are often closer to the bottom than top. Not always, but often. So the real question is not, is Bitcoin finished? The real question is, are we reacting to emotions or are we looking at the bigger picture? Because if you zoom out, every cycle has moments like this. We saw it during COVID. We saw it after FTX. We saw it after Luna. At the time, it felt like the end, but later, those moments become small dips in a long chart. And that's why this matters, because this is not a short-term game. It never was. Technology moves in waves. Adoption takes time. And clearly often comes after confusion. And in this video, I want to break down why narratives change, why Bitcoin didn't act like digital gold, why uncertainty is rising, why this might simply be a maturity phase, and why choosing your source may be more important than ever. Let's start. Let's talk about the digital gold argument. Yes, gold certainly made strong moves, but context matters. Over roughly 2 decades, gold increased about 5 times. Bitcoin, since inception, increased thousands of %, despite volatility. Gold is mature, Bitcoin is still emerging. And emerging technologies don't always behave the way people expected early phases. Because Bitcoin today may be similar to the internet before email, before apps, before streaming, and in the early days, people asked, what is the internet even for? They couldn't imagine online banking, AI tools, digital businesses. Bitcoin may be in that same discovery phase now. Now add another layer, AI. We are entering a world where AI agents, not human, will begin performing millions, eventually billions of transactions. These agents will not wait for banks. They will not use credit cards. They will not tolerate delays. They will need instant settlement, no middleman, global capabilities, and those rails already exist through blockchain infrastructure, DeFi systems, and digital assets networks. This isn't hype, it's functionality. At the same time, we are living through one of the highest periods of global uncertainty ever recorded, higher than the dot-com era, higher than the financial crisis, even higher than pandemic levels. Geopolitical tensions, conflicts in the Middle East, Iran, Epstein files, political instability, central banks debating whether to cut interest rate or not. Even the Federal Reserve is sending mixed signals. And uncertainty shakes markets, both traditional and digital. But historically, innovation doesn't disappear during uncertainty. It builds quietly. And something else important is happening beneath the surface. Regulation is forming. The decision around the Clarity Act in the United States is about defining how digital assets are treated, who regulates them, and how institutions can participate with legal confidence. When rules become clearer, large capital becomes more comfortable, and comfort attracts participation. While social media debates whether crypto is finished, institutional research continues to study it seriously. ARK Invest, for example, describes Bitcoin as a new monetary layer, a technology network, a new asset class. They also emphasize Web3 infrastructure, AI integration, and blockchain scalability as long-term developments, not short-term trends.
This Bitcoin is 3 revolutions in one. It's a global, digital, private, very important, rules-based, even more important, monetary system. Second revolution is it is a technology. It's really adding another layer, I would say, to the internet, so that we have currencies native to the internet that will be able to handle agentic commerce.
Then you have analysts like Tom Lee, who recently pointed out something simple but powerful. When sentiments becomes terrible and price action feels exhausting, markets are often closer to bottom than to top. Not guaranteed, but historically that pattern repeats. And here's the perspective most people miss. If you zoom out on the chart far enough, moments that once felt like the end of everything become small waves. COVID, Luna, FTX. At that time, each one felt catastrophic. Years later, they are just points on a long-term curve. The question is not whether volatility exists. The question is where you are looking from. And maybe the most important thing to remember is this. Every major technology looked uncertain before it became normal. Electricity, the internet, smartphones. At first, confusion. Then criticism. Then adoption. We are simply somewhere in the middle of that curve. It's about observing, learning, and moving with awareness instead of reacting with emotions. Because markets will always be noisy. Headlines will always be dramatic. And opinions will always change. After everything you've just heard, do you really think this is the moment to fear? Or could this be the kind of moment that later makes people say, why didn't I take the opportunity? Because even if we are near the bottom, and even if the price will move lower first, it still turns out to be a strong long-term entry. Let me know what you think in the comment below. Thanks for watching, and don't forget to follow me on X because sometimes it takes longer to post on YouTube and I share updates on quick insights there first. And if you'd like deeper discussions, you're welcome to join our Telegram community. The link is down below. I'm Lamia and I'll catch you in the next one.